Hey guys, what's up? What's going? Robin here. Welcome back for another video. I know it's been a little bit of a while since I've done a video on this channel. Basically, long story short, I've been pretty busy, and I'll explain as we go through this video what's been going on. But I've been busy working, lots of things going on, and I haven't done a video for about 2 months or so. So I figured, hey, I had some free time today. I had the day off. I'm gonna get a video done. I've been meaning to do this for a while now. I've just been a little bit busy, but I wanted to give you guys a quick little update. This one isn't going to be as polished and it's not going to be as fine-tuned as the other ones because I just want to get this out there for you guys to see because there's been lots of stuff going on and it's been a while since I did an update, so I figured I'd do it on the channel here. So this is just going to be a quick little video here. I'm going to give you guys just an update on the portfolio. We're not going to dive too much into the other stuff. I'll just give you guys a quick little update on the portfolio and some other things, and you guys can just kind of see what's been going on because there's been lots going on in the markets and just things in general. So the first thing we're going to do, like usual, is to give you guys a quick little update on my portfolio here on Wealthsimple Trade. So let's take a quick little peek over what's happened over the last little while. So first portfolio, we have 156, just shy of $157,000 on my Wealthsimple Trade account. I'm going to go over my accounts first, and then I'll give you guys a bird's eye view of all of our accounts and everything like that. So 1 month return is up 4%. So the markets have been pretty good in the past month. As you guys will see, my accounts mostly hold a lot of mixture of stocks, but we're pretty much heavily invested into ETFs and different things. I will cover all that as we go through the video, but just in case you guys want to look up my stocks in my portfolio or follow alongside with me, there is a link to Blossom Social in today's video. You guys can click that link and see all my stocks. You can see everything on there, completely free to do so. Just install the app, download it, and then when you get into the app, look for my portfolio. It'd be Robin Haney. You'll see my picture and everything. Everything will be on there for you guys to see. And also there is a $25 bonus if you guys sign up to Wealthsimple Trade. Use my affiliate link in the description of today's video if you guys want to support the channel. But last month, pretty solid month overall. Last 3 months we go here. And again, my portfolio is probably more weighted towards American stocks, but it's about 60-50. I'd say about 60% American, maybe 65 or something like that, and then the rest Canadian. So just mostly those two things, and they've done pretty well for me. Past 3 months, we're up 5.52%, which is about $8,000. Markets have done really well this year, and over the past 3 months or so, we've really seen, even the 6 months or so, we've seen the Canadian markets start to kind of get some steam too, which I've been waiting for to happen. I've kind of been predicting, okay, it's going to happen probably sometime this year. I just kind of figure it'll probably happen towards the end of the year because they're about due for a good year. But 10% return over the past 6 months, just shy of 11%. Pretty good year overall, if I do say so. Up about $15,000, so pretty big gains there. And 1 year return up 30%. That's $36,000. Actually, pretty crazy to think about. The portfolio has grown so much since we first started these videos. You guys can literally go back to I think it was 2019 or 2020, and the portfolio was just a couple $1,000s. You can see the growth. But once you get that snowball rolling, it really picks up there, and 62% all time. That's a new high in the channel, a new high for the portfolio. Just keeps growing, up about $60,000, and most of that is in a TFSA. And speaking of which, we'll go over the accounts really quickly here so you guys can see. TFSA, $147,000. I'll zoom in here. Might be a little bit easier for you guys to see here. This bad boy is maxed out for me. First home savings account is the next logical option. I think it's the next best account, especially if you're going to be buying a house. You might even actually prioritize the first home savings account over the TFSA if you want to buy a house, but it's actually a really good account. I've kind of learned, and since we're planning to buy a house, I don't know, whenever, next couple years, maybe later, but even then, it's still a really good tool to max out. So you get $8,000 per person. So you and your spouse, if you guys have a spouse or partner, make sure you do that. Same with your TFSAs, you get 2 per people. So if you have a partner, just like in our situation, my TFSA maxed out, but my partner still is working on hers. So we have tons of room here, and we have her first home savings account, RSPs. Like there's so much you can use, and most people weren't even really. I mean, I'm having a hard time filling these accounts out myself. RSP here, we have $4,000. I've been tricking a little bit of money into there over time. I started it out this year, but I've kind of switched to the first home savings account. I'm going to max that out, and then if I want to put anything in the RSP towards the end of this year, I might do that just to get a tax break, but we'll kind of see how things go and whatnot, and how that first home savings account is going to do. Again, priority is to max out both of ours, so that's going to be $16,000. That's quite a bit, and you'll get that tax savings when you do your taxes, so we'll kind of see how things go. But the next thing we're going to do is we'll jump aside the TFSA, and I'll show you guys the portfolio and whatnot. Specifically from the TFSA, we are up 45%, so that's $46,000 tax-free. When I gave you guys this number here at the top here, this is plus 62% all time from all my accounts on Wealthsimple. I should mention that. That's 62% all time. So that includes previous accounts I opened, I closed, etc., etc. I've had multiple TFSAs, so some have gained. I've closed them and then I opened up new ones. So people always ask me, why is my TFSA seem so large? It's because it's been growing over multiple accounts and I've moved some money around to close them. So you don't see all the gains there, but the portfolio is up. I mean, my TFSA is actually up even more than that, to be honest, all time. So yeah, a lot of people ask me questions, just in case anybody has any questions about my contribution room and whatnot. That's the reason why. But going down here, we can see the different stocks, mostly just really good, solid Canadian stocks, some income, some dividends, but not much. If you look at the actual percentages, once again, Blossom will show you guys a good bird's eye view of all that stuff. But our big ETFs we have are our VFE for American stocks. Buy it in Canadian currency. You don't have to pay any fees or nothing. It's the easiest way to do it. VDY for Canadian companies, and this is growth and dividends and whatnot. So that's those accounts right there. And I'll give you guys an update on our entire portfolio next, and then we're going to jump inside the dividends and some of that other exciting fun stuff. So next thing we're going to cover is our entire portfolios, everything together. And once again, we're hitting new milestones on this channel in the portfolio. Seems crazy to think about. One of the interesting things about money and anything when you accumulate it is in the beginning, you know, a small amount can mean a lot, but then as things go on, what defines a lot changes, and you'll look back and before you know it, a couple years later, you're doing like, it's kind of crazy to think of how much money we've been able to save up, how much it's compounding and growing. I showed you guys how much my portfolio has grown. When you add it all in together, we're up like almost $60,000 to $70,000 in total gain over the past couple years. And you know, all that work we put, it was hard work to save that money and put it in, but you can see it just compounds and grows. Thankfully, we had a couple good years in the markets that's really escalated things. So we have to be honest about that. But nonetheless, our portfolio is up $201,000. That's $200K invested. That's actually not our total net worth. Our net worth isn't too much more than that, but we do have a little bit of money put into some savings accounts that is going to be used for things such as a vehicle. And because we're going to buy a vehicle, and vehicles are not cheap right now. We're going to be buying a used vehicle probably within the next couple months or so, but we're not touching any of our investment money. So we have $201,000. That's a $200K portfolio. I can't remember which year it was when I got 100K. I got 100K, I think I was 30. I want to say it was about 3 years ago. I was either 30 or 31, I think it was. And I'm 33 at the time of doing this video. Next year, early January, I'll be 34. So not even like 3 years or so, we jumped from 100K to 200K. So it took me 30 years of my life to hit roughly, give or take, to hit roughly 100K. And it took me about 3 years to double that. So money compounds, money grows. There's a lot of factors there too. You know, I make more money than I did before. Not a ton, but I do make a little bit more money. My partner works full time now. So, you know, they just keep growing. And then you also have the money compounds and grows. Once you get 100K, you know, it's not just the money you're putting in, it's that the money you had previously before that keeps growing and compounding. But here are all of our accounts. As you guys can see, we put a ton of money in. We put a big dump in January, but this was mostly just us just moving money around. I'll zoom in here a little bit so you guys can see. January, you put $10,000 in. This was moving money from my other accounts into our TFSAs to max out our contribution room. Then throughout the year, we kind of just put money inside our portfolios, and you'll see a nice big jump up here kind of around July and August. This is because my partner started working more too. And probably from September to October, November, December, it's going to be some pretty big months as well, but it does depend because we do have some expenses coming up. We do have actually a few, not tons of expenses, but a few things coming up, but that's just kind of how life goes, you know, just kind of the way things work. But it's an exciting time for us, which is why I've been a little bit busy as of lately. So, but it's been awesome. It's been hard. It's been a little bit stressful, a little bit hard to save money in ways. But when you build it up and you get that nice chunk of savings going, as time goes on, you can kind of take your foot off the gas pedal a little bit, so to speak. But here's the different accounts we have. So we have some different accounts here. First home savings account, this is mine. We have the TFSA, we have my RSP. Going down here, we have my partner's TFSA. That's going to about $40,000. So she has tons, my partner Tamara, she has tons of room left in hers. So depending on how things go, once again, we're focused on the first home savings account to get that topped up towards the end of the year. hit that $8,000, and then we can both claim that on our taxes. And then whatever we get for tax break, we'll be throwing that inside the TFSAs. And I might even stick some money into my RSP to knock down even more, because I have tons of RSP room I've never used over the years. Even though I am in the lowest tax bracket, we both are. Like individually, we're in the lowest tax bracket. But together, obviously, our income would put us higher if it was a single person, but because we can split our income between the two of us, it works out really good for tax purposes, which is why it's beneficial if two people can work instead of one. I'm going to have to do an actual video on taxes at some point in time, because there's so much you can learn about taxes as time goes on to really help yourself save money down the line. And it's such an area that people just don't take advantage of. But that's that. I'm going to go over it quickly and go over some reporting, so you guys can see some more information about a portfolio. Let's go year to date for this year. I like to look at the year to date. We could go 1 year, but we'll go year to date. We can see our net contributions was about $21,000. Again, this is being skewed up a little bit by this $10,000, which was not actually 100% contributions. Some of it was just moving money into other accounts. So it's not really that much, but I'd say it's somewhere between about $1,000 to $1,500 we put in each month or so, give or take. Some months a little bit less, some months a little bit more. But in March, I did start working full time, which kind of, you can see it bumped things up a little bit towards the end of the year. And I've been saving money to get ready for a vehicle, because I know once we hit a vehicle, it's going to be a little more expensive. So that's kind of one of those preemptive things we've been doing. Net change is about $55,000. That includes our deposits plus our gains, our dividends, everything there. Let me just double check. This number includes contributions and withdrawals. So yeah, so that's a net change. Rate of return for our portfolio is about 21%. That's in our, like, if you averaged it off across all stocks. So anybody who tells you like you can't buy the market or buying the market is stupid or dumb, or anybody who tells you that you have to buy individual stocks to make money, it's complete bull. In fact, I would challenge anybody who's bought individual stocks over a period of time, not just 1 year, 2 years, but like 5, 10, 15, 20 years, to show me that they can beat the market, because I've yet to see that happen. And I see the same story. Everybody starts buying individual stocks and then they go to ETFs, just because of simplicity, or just because, I think a lot of people realize that it's a very hard thing to do consistently. It takes a lot of time. And like, let's face it, guys, you have limited time on this earth to do things. Might as well spend it doing important things. And you can get really fixated with money, finances, all that kind of stuff if you're not careful, as I personally know. But keep it simple. I'm a big fan of that. Investment growth is $33,000. And again, this is pretty much identifying what you want to buy, the kind of portfolio you want to do once. And then you're just buying the same stuff every day and you're making slight adjustments as time goes on. These days, I don't put a lot of thought into things. It's pretty basic because I've done the work ahead of time. A little bit of work to get things going, but once you get things going, it works out pretty good. So investment growth, $33,000 year to date. 1 year return, $47,000 1 year. But it's been a good 2 years. Let's be honest. Like that 1 year and the last year to this year, it's been a good year, for sure. So let's be honest about that. That's not normal, but it feels good to get. Average monthly dividends is $500. We can go over it quickly here. Quarterly, because we get our big dividends every quarter or so, it's been some pretty big paychecks, like $677, $568, $800. That was a big month in July. September, $500, and I think October we get dividends from all our ETFs again. So depending on when they fall and stuff like that, October we might be able to beat 800. I don't know. I haven't done the math yet, but it's looking like it might be that way. It'll be close, which will be another new high on the channel. We just keep hitting milestones. It's actually pretty crazy. And dividend income, you guys can't see it because my webcam is blocking it, but at the bottom here, it's $4,737. Let's zoom out all time, show you guys some more stats here. We can see some different things here. And keep in mind, the reporting on this isn't like 100% accurate. There's a few little things here and there, but for the most part, it is pretty accurate. Like it's just a few little, sometimes you get errors when you link and sync different accounts from different brokerages or different platforms. It can miss some gains. It can over-report things, some dividends, but more or less passive has been pretty solid for me for being accurate. But we can see here, I like to always do the dividend comparison over the years. So in 2020, $152 in dividends. 2021, I moved a bunch of money into I think it was 2021. I moved a bunch of money into my TFSAs and did more of my self-directed investing. $1,236 in dividends. 2022, $2,620. 2023, 4,495, and then 2024 we've already beat last year's, and it's beginning of November. I would say it's like the end of October, since we haven't gotten any dividends from November yet, I think. But yeah, we've beaten last year month, and we already got 3 months still left over. So predicting about 5 to 6K this year, which is going to be another new high. So it's pretty cool. But remember, guys, it's not just the dividends, it's the growth. It's the dividend growth, all that great stuff there. So just a quick little overview of some of the stats. I always like to show this stuff. You know, when I was a beginner and I was getting started, all this stuff was super inspiring for me. So I hope you guys can kind of enjoy that. And I like to always check in and kind of see how things are going. It always feels good to see, you know, to take a peek at a graph like this and just see that growth over time always feels good. So the next thing we'll do is I'll give you guys an update on the dividends, and then we'll take a peek at the total return for our individual stocks. And then that'll probably be it for today's video. Okay, so here's the dividends for the portfolios. I'm gonna kind of show this really quickly here. Quick filters here. I'm gonna filter this out. So you can go on Wealthsimple, you can click on type, and I'm gonna select check mark of dividends here, and we can see all the different dividends from our accounts. So October, we've had these ones that these kind of random low ones are about $100 or so. I think I have in Wealthsimple Invest. I put $100 in there. I was gonna do a video, didn't end up working out kind of thing. So that's just some random money. You can kind of ignore these random ETFs. That's just what that is. Same with that. Although on the first, it looks like we did get a dividend from TELUS for $20. Going downwards, here's the big ones, the main ones. So Couche-Tard giving us some dividends. Couche-Tard is kind of have a bit of a rough year this year, but in the past it's done really well. So it's still doing pretty good. XCI, one of our ETF dividend ETFs, $4. CNR gave us some dividends. You can see a lot of overlap in the different accounts. So if you see 3 different dividends for the same stock from the RSP, non-registered, which I don't have anymore, and then the TFSA. September 11th, VDY dividend, $150. September 10th, FTN dividend, $13. On the 9th, we got some dividends from our covered call ETFs. Again, I don't have a ton of money in these. These are just for some passive income. I had a little bit of flexibility for the portfolio so that over time we can benefit from just having some more monthly income coming in. Fortis dividend, 1057, XCI again, and that was pretty much it for September. So September wasn't a big month, but we're going to be getting some pretty big dividends for the month of October. And before we end today's video, I'll give you guys an update on one of my favorite tools here. This is Wealthica. Wealthica is a tool that basically pulls all the information from all of your accounts and gives you averages for things like returns. So this is really nice for me. When I have multiple different accounts, I think we have about like 6 or 7 different accounts now. Like they start to build up and it becomes tricky to manage. So I like to use tools like Passive to kind of get some bird's eye views. But then the thing is, not every tool gives you everything you want. So I like to use some different ones to kind of see some different information here. But you guys can see here we have 201K in equities and about $354 in cash, which actually is good to know because I totally forgot that I put some money in my account last week and it looks like I didn't invest it, which I thought I did. So I'll have to go through at the end after this video and invest that money because I totally forgot about that. Might as well get that invested and get it going while we can. But here's the different ETFs we have. Once again, pretty simple stuff here. It sorts it by book volume at the top. So our biggest holdings are at the top. And like I mentioned, the bulk of our holdings are in some big ETFs. That's the way I do it. That's the way the research shows. It's one of the easiest ways to get started with investing, and you can't go wrong. You know, just make sure you pick the ones that work for you, and just keep it. If you want to keep it complicated, keep it complicated. If you want to keep it simple, keep it simple. I like it simple. I like to focus on principles, foundations of things that work good, because you know life is complicated enough as it is. When you start making everything complex and you overcomplicating things, I kind of learned something as time goes on. There's nothing wrong with getting advanced and complicated with things if you want to go there, but a lot of the times the best solution is the simplest solution. So if you can just break things down to the core things that matter the most, get the best bang for your buck, especially with how much time and work and effort you put into it, I'm all about that. And I think that's really, really good. That's like the definition of efficiency. It's not, it's to put the minimum amount of time and effort and work into something and get the best result. That's true efficiency. So I'm all about that, especially when you look at all the different things in life. Like there's so many different things. Focusing on the principles will get you very far, especially if you're consistent with them. And you follow the right ones. You can even beat people who are doing advanced stuff just because they forget what's important, right? Or they make things too complicated. There's too many steps or too much effort, and yeah. So anyways, consistency, keeping things simple so you're actually going to do it is key here. here's our ETFs. We have VFE, VDY, my biggest holdings, probably have done the best as well. VFE over a net gain with the dividends and growth here, 40%. Column on the right is stock growth. And then this income is going to be the dividends. And then this column right here in the middle is if you take the two and combine it together. So the total return, which is always the biggest thing to consider, because some stocks pay more dividends, some stocks have more growth, some have a combination of the two. Total return is all that matters. You're basically just, the only difference between those two investment styles is that you're just getting your returns in a different way. Some you get long term, some you get more like periodically, like monthly, right? You pick the ones you want. The cool thing is there's no set in stone thing you have to do. It's your portfolio, it's your money, it's your life. You construct it the way you want to do it. That's probably a good thing I think a lot of people need to hear out there, because if you go online, there's a lot of like different, like you have to do things this way. I'm a very creative person. I like to break free from that and say like, hey, I'm interested in listening to why people do things, but you don't have to do things just because people say you have to do them. You can do them your way. So my portfolio is kind of done my way, but of course I do focus on fundamentals. I like growth. So the growth comes from VFE, and we can see that 40% return, $30,000, the bulk of my return. VDY is dividend and growth. We get a little bit of both. Canadian market exposure, actually done quite well, surprisingly. And this year, again, I still think the Canadian markets, the overall Canadian markets are gonna grow because they've lagged behind. I think we're gonna get that back maybe towards the end of this year, and we'll see what next year's like. Covered call ETFs, a lot of speculation around these bad boys. I haven't bought too much of them lately. I trickle a little bit of money into them, but I bought a lot of them last year when they were down, and we've seen the markets recover. It just kind of goes to show you that these kind of funds can perform well, and you get the return when things recover, right? And you get those nice yields. HYLD is up 32%. I kind of bought it at the right time, to be honest, but at the same time, it's the same way with stocks, right? You buy the dip. When markets recover, you can really see that benefit your way. Couche-Tard, 25%, been pretty good. TD, we can see TD Bank has kind of like jumped up. Some of the, again, Canadian markets have jumped up quite a bit. We have some other stocks here. Covered call ETFs, HDIV, 20%. FTN, even our split share funds, which give us high yields, actually not bad, 17%. CNR, probably one of my lowest performing stocks are going to be some of the Canadian ones, but that's to kind of expect. But CNR kind of surprises me. It looks like they've struggled quite a bit lately. TELUS isn't really surprising, as they've had a rough time, especially with interest rates. That'll be an interesting one to watch is TELUS. I haven't really bought much lately because I'm not too sure. It's a tricky one. I'm just going to write it out. I do hold it into ETFs too, so I get it there as well. Fortis has done pretty decently well. Dollarama up 28%. I'm a big fan of the consumer. I think some of the best Canadian stocks are the consumer defensive stocks. The economy is so reliant on them. And with everything being so expensive, those places where people can go and save money, it's such a big thing right now. And any place that can give Canadians value and can grow a business in a good way, they're going to grow. So a lot of those consumer defensive stocks, I think there's so much opportunity for those businesses here in Canada. Because it's not like the States where like there's so much money and the businesses are so bigger. Everything's more expensive here. It's harder to build infrastructure. The companies that kind of have that already built here, they're going to do well because they already got that going, and they're just keep expanding and growing. And again, everybody's looking to save money. So, a store like Dollarama, I think they're going to do well. As long as they can keep expanding, keep growing, which they are doing, we should see that grow. But again, I don't have tons of money. We're just kind of growing it as time goes on, right? I like to have fun with this money, but it's not a make or break kind of thing. And then we have some other stocks here at the bottom to kind of close it up here. But anyways, guys, you guys can go through that. Feel free to pause the video if you wanted to go through and review anything. Once again, all my stocks are on Blossom Social. You guys can check them out on there. Wealthsimple, again, link in the description of this video if you guys want to support the channel. And that's going to be it for today's video. So I just wanted to get that out there. I wanted to get this video done so you guys can see it. And I'll probably try and do a video maybe towards next month or something, but no promises. Sorry it's not as polished and not as fancy as my other videos, but I just wanted to get this out to you guys because I'm sure a lot of you guys wanted to see an update, and I wanted to do one, and I want to see how you guys are doing. So let me know how you guys are doing in the comments. Good to see you guys. Take care, and I hope you guys are enjoying the weather and the fall, and take care, and have a good one.